Welcome to the Asia Climate Finance Podcast, where our host and his guest discuss and evaluate climate business and climate finance issues and trends. Please support us by liking and subscribing to the podcast. Also, please note the disclaimers at the end of the show. Here is your host, investor analyst and author, Joseph Jacobelli.
Hi there, and a very, very warm welcome to the 40th episode of the Asia Climate Finance Podcast. Our guest today is Mike Thomas. Mike heads the Lantau Group, a Hong Kong-based consultancy, and he is one of the leading energy economics thinkers in the Asia-Pacific region. As it is the beginning of the year, Mike evaluates a small sample of the many developments in the region's climate finance and business in 2023. He also shares a few thoughts on 2024 and beyond. We discuss some specific markets, including Malaysia, the Philippines, Singapore, and China. And also, we examine some of the major themes, such as the ASEAN grid, offshore wind, and grid capacity. Mike truly offers some unique perspectives thanks to his vast experience and extensive work with corporates, governments, and financial institutions. I hope you enjoy the show. Hey, Mike, thank you so much for your time. I know you're traveling around and was able to catch you in between trips. So very, very thankful for your time. How's the weather in Manila?
No, thanks, Joseph. It's been great. It's been sunny and not too hot. It's quite lovely. I've actually walked to meetings today, which is always faster in Manila when the traffic is what it is. So, but it's been good to be here.
Excellent. Yeah, I have fond memories of the traffic in Manila. Not. So we've got your bio in the show notes. Also, of course, you did the episode last year for the 2023 and beyond outlook. But can you just kind of remind listeners a little bit what the Lantau Group actually does?
Sure, Joseph. Appreciate that. So, my background's sort of energy economics, and the Lantau Group company I co-founded, now the managing director of, is really an Asia Pacific energy economics consultancy. But what does that mean? So there are three things that we do. We advise investors on commercial transactions involving energy assets in the Asia Pacific region. We do regulatory and policy related work, which in the energy transition world that we live in is quite a wide range of things. And then we also work with end users on either their energy procurements, their green credits, their green procurements, their tariff outlooks, or what we call the sort of the grid to the customer side of the equation. So fuel to grid to customer, that's like two parts, and then the whole regulatory energy design, energy market. It's been quite fun. We've expanded over the last year quite a bit to include India. So we're now India, China, Korea, the ASEAN countries, and Australia, New Zealand. So it's keeps us out of trouble.
Well, it sounds like a very busy time anyway. But are the clients mostly corporates, governments, financial institutions?
It's been quite a mix, Joseph. It's about one third, or not by numbers, but sort of 1/3 of the businesses, people financing projects, whether it's the sponsors, the proponents, or the financing side, and both buy and sell side. Mostly renewable energy, but also gas assets and LNG plays. But then also on the government side, we've got regulated utilities who are still regulated in Asia or are still going through policy things, or many of them are owned by governments. And then you've got your government ministries with decarbonization, and then you've got your tech sector and your early movers and your RE100 companies, and actually trying to meet commitments and either advocating for change, seeking insight about markets, or actually trying to structure their green strategies or the green portfolio. So it's a little bit of everything. Mostly private sector, but a good dose of governments here in Asia. That's the way it falls.
That's the standard, I know. Getting into the kind of two areas I wanted to focus on today, which is first a recap of climate business and finance in 2023 in Asia. Based on kind of your work, what do you think are the kind of like 2 or 3 things that you've noticed?
It's a great question, and sometimes to me, Asia is a growing part of the world. I mean, that's obvious in many ways. Many of the fastest growing economies, many of the largest economies in absolute sense, and all most diverse. So even if there's what you might call an event that would cause a dip, like interest rates going up or something like that, it's not always translating into a reduction in what we see in the business in Asia. And so 2023 for us was a growth year for commercial transaction support, but my sense is that there could have been so much more if the environment hadn't been a little bit harder on the financing side and a little bit less unpredictable on the policy and fuel side. Governments here have a lot of gatekeeper aspects to the renewable energy market. Some of the markets you can't actually invest in unless there's an auction or there's actually a path to market, and a lot of preoccupation on fuel disruptions and things of that sort. But generally, we saw both buy and sell transactions across the ASEAN region. We saw continuous interest in Singapore's imports. We saw growing interest in Malaysia's, shift towards more favorable green energy, which has continued into 2024. We saw offshore wind in Korea and Taiwan. We saw a little bit less in China, and it's probably a little bit of geopolitics and a little bit of rejigging exactly what business is being done and settling out what's happening in their dynamic energy markets. But and an increasing amount of inquiries about Japan, which isn't in the market we directly cover, but it's one that we're kind of getting pulled into increasingly because of the interest from batteries and renewables generally. So yeah, for us, 2023 was a growth year, and my suspicion though is it was actually one of the trickier years for the actual investment community. But Asia is a long-term play.
Yeah, I mean, I think the fact that you're investing in long-term assets is key, and looking at things on a 5-minute basis is not really helpful. Obviously, there are things that can disrupt the markets very, very sharply, like supply chain bottlenecks, etc. But looking at the long term, obviously, one would think that those supply bottlenecks, for example, would ease, and actually, in fact, they have compared to COVID times, right? Looking at Asia, I mean, obviously, we can't. I think there's something like 80 countries, including the islands, Pacific Islands, etc. So if we talk about 80 countries, this podcast would be the longest podcast in history. But focusing on just a few, you mentioned earlier Malaysia, which I kind of find interesting because in a way similar to the Philippines, it had a lot of start and stop. So, oh yeah, we're gonna go green, and then nothing happens. Oh yeah, we're gonna go green, and then nothing happens. But you were saying that actually perhaps something is, it's more of a start now, or something is happening there?
Yeah, I'm bullish on the opportunities that are there. It's been a market neglected by and large by the international renewable energy sector until more recently. A little bit more closed. There's no path to market. If you think about different routes to monetization, there are relatively few, and they're I call them gate-kept. But Malaysia did dabble with these large-scale solar auctions, and they've been moving progressively to it. And they just announced day before yesterday, maybe a day before that, 2 gigawatts of solar to be done. And I think the measure which is a healthy step up. What's interesting about that is less than a year ago, maybe 8-9 months ago, they released a national energy transition roadmap, which was supposed to be an energy transition roadmap. But honestly, it was a gas roadmap for the first 10 years out to 2035. There really wasn't much new solar coming in until after 2035. So in that sense, it wasn't consistent with, what we're seeing as the fundamental trend in Asia, which is where there's gas, there should be an opportunity for solar to displace it. And we argued that this is odd and probably isn't the way it's going to be. It is probably the battling out of perspectives about what Malaysia should do with its natural resources. But this changed 2 days ago to shift to solar, which is much more than was in the roadmap even just 8 months ago, says to me that at the end of the day, the fundamentals drive the bus. If there's savings to be had or an opportunity, and that's really where solar is displacing expensive gas that could be sold to Singapore. So then it starts to make sense, and that's been a theme we've commented on a number of times. And the fundamentals don't always allow you to do a good project because the project depends on having a commercial contracting channel, or it's not always available. But it does tend to drive the longer term changes in policy, which is for Malaysia, I think they've got a reasonable solar resource. They've got a lot of land, a robust system, and they're interconnected with Singapore, and that has an appetite for import. So there's quite a few changes in the amount of interest that we're seeing in that country.
Yeah, maybe one country we can talk about is the country you're in right now, Mike, the Philippines, because I think that very, very sharp start, stop kind of situation there. We're going to go to renewables, we're not going to go to renewables. And then a few months back, or maybe over a year ago, they decided to lift the foreign ownership. So maybe you can talk a little bit about those events and what's happened since.
So it's been an interesting market, and that was a positive development. Anytime you remove sort of a restriction like that at a dynamic time that frees up people and capital to participate in projects more efficiently, that's pretty positive. For me and for the Lantau Group, we've always seen the Philippines as one of the more dynamic markets in Asia. It does have some start, stop, but compared to everywhere else, it has more routes to market for renewable energy. You can contract directly with a customer. You can create a retail business and enter that. You can sell into the WESM. You can participate in the periodic auctions. There's a renewable portfolio standard. It's not super binding or anything, but there's a fairly, as far as things go, hospitable environment for entry, or it's freer entry. And now, like you say, it's got one less restriction in terms of who can own what. So in that sense, we've always put it forward as a more robust market. If gas is it's either imported as LNG through the new terminal, or it's international linked coal prices or internationally priced domestic gas. Those are pretty fundamentally favorable characteristics for developing onshore wind and solar. And they were a leader in many ways in batteries, to bringing them in for ancillary services. But you're right. I think the fundamentals are stronger than what the uptake is. But I think there's a couple of 100 megawatts of solar at the moment, but there's 2 or 3 gigawatts that's committed now through various, in the pipeline through various auctions. So what we would start to see is that will start to add up quite quickly as those projects come to market. The country is very committed to decarbonization. They're definitely exploring things like offshore wind, which would be expensive relative to other things, but it's been pretty advanced undertaking to take a look at what we've been looking at the regulatory and economic framework for that. So we hear the message that this is a strong commitment to to greening up. So it's pretty positive. If you just leave it to its own devices and you don't actually encourage renewables more, growth alone will, economic growth in the Philippines has been pretty strong for quite some time, and all the projections continue to say that. So you wind up with a gas solar battery kind of dynamic on top of a declining layer of coal that just eventually ages out. So, the gas solar is very healthy dynamic. Your gas is displaced by solar, so that just goes on. So, anybody's in the Philippines stays here. Whether they get their project this year or next year, there's just a long runway of projects that I think will be done. Yeah, so it's a smallish economy, but it's a very consistent performer in that sense.
You mentioned Singapore before. I don't know if you, and I've seen obviously headlines about the kind of very keen, a country being very keen to import renewable energy. Can you explain a little bit of the background to that, please, Mike, and also kind of your views on whether that's some experts are very skeptical. Some experts think that it's a great idea. What are you? Could you explain a little bit about the background and then maybe tell us your views?
Sure, Joseph. Singapore is a fascinating conundrum. So you have a country that really wants to lead and be decarbonized. They've written about this. They published it. They've got their 4 switches, all of the points that eventually you switch on to decarbonize, ending with hydrogen, but beginning with in-country solar, over water solar, and then imports, and then eventually some mix of maybe of hydrogen or maybe carbon capture, and a long-term pathway for electrification, and including demand increases that are maybe driven by data centers and other things that all create a fairly demanding environment because there's no land for solar and there's no wind for wind. So everything really has to come from across the border. And it's a very tight energy security, energy adequacy, energy control system. So if you start talking about imports, you have to start thinking about the framework by which you're not just dependent on any one thing, that you can have like a network of imports, that you can lose one and still have others. You have to think about how much you have in country. But you start doing that, the first moves down that strategy, and maybe the whole strategy itself, very expensive, because you're building in all of this redundancy, you're building all of these restrictions, you're building all of these requirements so that you can bring in gigawatts from someplace else but live without it, or force that risk to the investor to take it, which drives the price up. And then so it's doable. I mean, mechanically, arithmetically, it's doable. You can import from Malaysia, you can import from Indonesia, you can import even from Australia, or Vietnam and Laos. All of these things are in play to various degrees, active or fantastic. But there's a number of consortia, there's a number of groups that are looking at that, and we look at these things, and as long as Singapore is committed to decarbonization, it's just money, right? And honestly, one of the big pillars of the energy transition, and this is so much important for investors as well, is like there has to be a willingness to pay. Right. So we were just talking about the Philippines. The Philippines, if it grows 3, 4, 5% a year, there will be opportunities to build solar and wind just to displace gas. But you're not going to be displacing all of the gas, and you're not going to be displacing all of the coal. You're just going to be riding the growth wave. For Singapore to take a more aggressive path and say, we're really going to go all the way. And I don't think the Philippines has even put a zero target yet.
No.
And Malaysia really hasn't put a zero target yet, but if Singapore tries to do it, it's going to be off the chart in terms of the cost. Will the commercial and industrial customers will they pay it? And this is the question we think needs more attention. The projects themselves are good. A couple of them are good. I'm sure they'll do some, but how fast will it go? But right now they've put their hand up, and all of a sudden it's become really interesting as a mover. But there is an element of is it really going to happen? And I think that part is. That part is true. I mean, one proposal is to import wind from Vietnam to Singapore. That's fine, but Vietnam also needs power. So, would you build a wind farm and then send it all the way to Singapore, or would you build a wind farm and send it into Vietnam, because where it would be less expensive, but you would get for less money the same amount of renewables, just from an Earth point of view, right? So Singapore is trying to pull the resources to it, but in Asia everybody needs something. So it's a very it's an interesting thing. Maybe they're a little bit too far ahead.
From my perspective, and please do argue with me, please. The whole kind of Singapore effort has two potential long-term positive effects. One is finally the build-up of some sort of ASEAN grid that I think we've been talking about for 30 years, if not 40 years. And that would be absolutely formidable for a bunch of reasons that And the second one is Australia, because whereas it doesn't make a humongous amount of sense for Vietnam to export energy when it needs renewable energy, when it needs that energy itself, Australia is a developed country. They've got more wind and sun and solar resource that they need. So the whole thing would make a lot of sense. But obviously, like you said, at the end of the day, it's all about the dollar per, or whatever currency, per kilowatt hour to the end user. Because if everybody's willing to pay, $10,000 per kilowatt hour, then everything gets done. But that's not going to happen. At least not during my lifetime or your lifetime, or probably the lifetime of our kids. But I just thought that those would be, fantastic triggers. I mean, Singapore would be a fantastic trigger for those two things to happen: the ASEAN grid and Australian renewable energy exports.
Yeah, unfortunately, I won't argue on the ASEAN grid one. It's an idea whose time is come. However, the imports not necessarily all coming to create the ASEAN grid. Some of them are creating like a hub and spoke, partly because the ASEAN grid isn't as developed or as enabled or as third-party accessible as it should be. So what are you going to do? The ASEAN grid isn't as accessible or enabled as it should be. Which creates a problem, because if you're a developer and you want to use it, or it's there and it's logical to use it, like you use a European grid or one of the North American grids, do you really want to be subjected to getting a wheeling charge in Thailand, a wheeling charge in Malaysia, like what they call stack of pancakes, where everybody lays another charge on top of it? By the time you get to Singapore, they've taken you're buying a big stack of pancakes and you're paying too much, so you just build your own line. And then it's like, well, we've missed an opportunity to actually build out the ASEAN grid. People are building. So, I think that I hope that you're right, that more attention is spent towards using the ASEAN grid and getting not the technical aspects of it right, but the third-party access pricing, wheeling charge aspects right. I think the engineers have studied it forever. It's time for some of the economics to get right. And then on the Australian side, you could argue that the resource is there. What gets exported? Electrons are molecules. And at what point? But you use the same sunlight, you use the same wind, you use the same land, and then you have to determine what is the most valuable form to export. Is it green hydrogen, or is it a subsea cable carrying electrons? And I think that Singapore has helped illuminate that debate a bit by creating an opportunity for Sun Cable to explore the electron side of it, but then at the same time, people are talking about the hydrogen side. And one way or the other, Australia is going to be key to this.
We've talked quite a bit about solar, and I think another thing that we've seen, not just in 2023, but also maybe just in recent years in general, is offshore wind. Yeah. And that's been kind of like a complete boom. Of course, my personal favorite story is Taiwan, where I think back in 2015 and 2016, I was writing about the potential, and people asked me why bother writing about such a theoretical subject. And 3 or 4 years later, it became quite booming. So pat on the back for me, a rare pat on the back for me. But talking about offshore wind, what did you see in 2023?
Yeah, thanks, Joseph. It's a good question. And offshore wind is one of these things where there's a strong constituency, stakeholder group of companies, group of expertise that looks at Taiwan, Japan, Korea, and China. But I think most of the commercial activities so far have been Taiwan and Korea and progressively Japan. The wind is there. The renewable energy appetite for reducing reliance on expensive gas is there. The question is, can you get offshore wind to the price point that can be done in the North Sea? Because if you can, then it's good. And we're looking at this in the Philippines, where the wind is not quite as good, and it's the sea bed's not quite as friendly. So there's a lot more uncertainty, but and it could be quite a higher cost. But the key part of this is, if you're going to go to decarbonization all the way, you need a larger scalable resource like offshore wind in many countries in order to make the equation kind of close to get to zero. So it's a matter of, do you do it now or do you do it 10 years from now? It's not a question of whether, it's a question of when. And for markets like Korea, they're struggling. KEPCO's financials are dreadful. The fuel cost changes, gas and coal have really hit the country really hard. If you could turn more of the power into fixed price, stable, non-fuel sensitive, there's a premium that people will pay for certainty, for de-risking that. And I think one of the things that come out of the fuel disruptions of recent years is people are looking at that and saying, well, maybe we'll do it. Certainly our business for looking at offshore wind and REC prices, it's like those things go together. What is the REC value that goes with the electrons, so that we can figure out whether we're selling the two things separately or bundled, and how they think about the projects. That's we've just done a continuous stream of that work in Korea, and the projects keep on coming. So I think that's real. Philippines will wait and see whether that happens. The government's been very bullish on developing their offshore wind capability and their runway, with tens of gigawatts identified as desirable and maybe even economic later in the 2030s decade. But here in 2024, it's still a little bit too early to call.
The interesting thing about those East Asia specifically, Korea, Japan, Taiwan, is the end user price. Now, these numbers are a little bit dated, but the last time I looked at it, which was a while back, the Japanese consumer on average was paying twice as much for electricity as a Korean consumer or a Taiwanese consumer. So does that mean that there's a bit more potential for kind of short-term potential for offshore wind in Japan relative to those two other countries?
That's an interesting question. The fact that the end user is paying different amount doesn't mean the electricity costs different. And in that sense, or that the avoidable cost when you bring in offshore wind would be that different. Both Japan and Korea depend on imported LNG. So right off the bat, that's something they share in common, and the cost of that is pretty much identical. And then you get into what is the how much capacity value do you get from wind? When does the wind blow? How much can you rely on? And then how much stabilization can you bring to your tariffs by removing some of the volatility from it? And both countries have the same issues. Now, Korea has lower prices, particularly for domestic customers. The government's raised the industrial customer price, I think, 4 times in the last year or so, quite dramatically. But with elections coming, haven't really touched the domestic customer. Right? KEPCO doesn't make any money. I think if you could create something where KEPCO lost less money by reducing fuel costs or something, that would be attractive. That may not quite be offshore wind, but it Korea doesn't have has a tougher topology for solar. So I think that's the grappling point. Both countries have very similar cost structures when it comes right down to it. They have different tariff structures. The Japanese customer pretty much pays the full cost of service, and in Korea they don't. But the value of renewables as a portfolio addition or a stabilizing addition is actually quite high in both countries, and I think that's why we're seeing more and more deals. And a lot of the tech sector is based, derives from support from both of those countries. So there's a huge RE100 type mandate. So at that level, there's a lot of advocacy for trying to get the best access arrangements and to try to open things up a little bit. It's I think that's why the activity of both of those is growing. Is that it has to. Same with Taiwan. Imported LNG, moving away from coal, a limit to what you can do in solar, some decent wind offshore, appetite by large companies like TSMC and others for green power, and a good enough offshore wind resource that it can come in at a not unreasonable price. So it's very alluring. Expect to see more.
One last place in our climate business and finance visit of Asia is China. Now, I know that currently, business-wise, the focus is on some other countries, but I do know that you recently wrote some analysis on what is going on in China. Could you just very briefly, and we also saw some record numbers in terms of solar installations and wind installation in 2023, despite everything else that is going on, the property crisis, etc. So any just quick thoughts on China?
Yeah, China's solar business alone is on a scale that is, I don't know that any other country comes close to replicating it. Just massive. And China's sector reforms, opening up, changing the risk profiles everybody's exposed to, creating spot markets in many provinces, in exposure in many provinces, and then creating or shifting to new green instruments, but doing so quickly and before people really understood what they were or whether they were necessary or how stable they were relative to what they were used to, like IREX or something. It's all happened so quickly. So what we saw as sort of the external world, as sort of the outside world inbound, sort of dried up. We didn't do that as much work on the sort of IPP side, but the end user side, seeing more risk exposure and more opportunities. We saw a growth in our large customers understanding China, trying to decide what priority to attach to China, make mostly not so much green strategies, but making sure that they weren't going to get caught out with a supply disruption or a unexpected price volatility because they didn't sign up for the right contract and somehow got thrown into the spot market. We helped bridge a lot of communications between local teams and international headquarters, kind of providing a sounding board for both, because historically this wasn't a conversation that was frequently had. The Chinese power sector was much more regulated, and so very few companies have the same kind of electricity market trading capabilities and all of that in country. And a lot of the headquarters are used to this in Europe and in the U.S., but not always know how to communicate. So that's really been a large part of it, Joseph. But what we've started to see at the end of the year and now the beginning of this year is more interest in the behind-the-meter solar rooftop business by international investors. I think partly because they can try to build a portfolio of multinational roofs and C&I roofs, and so it's like the market's kind of divided that way. But with all the reforms, there are new risks to that, and so that's keeping us busy. Sorting out how stable are tariffs, how exposed are tariffs to spot markets and time of use pricing and things of that sort. So it's the China business has just become a lot more end user, a lot more nuanced compared to, say, the ASEAN businesses, which is still very much grid-based projects. But for China, it's been basically large customer exposure, behind the meter business. Very interesting dichotomy.
Fantastic. Just moving on to kind of the second part, very, very briefly, is the climate finance and business outlook for 2024. I mean, do you have any particular themes that you're looking at or events that you're looking at? I mean, I think you mentioned earlier that, all things being equal, 2024 and maybe even 2025 could be even a lot more stronger than 2023 and 2022. So any kind of major themes or major events are you looking at for 2024 and beyond?
Yeah, it probably isn't major event driven. It's more like the dust settles, the coal and gas prices have come down a little bit. Government policies have gone from panic mode to now back to decarbonization. At 2024, we're getting deeper in. People are moving still away from coal. I think where we're just saying the policy side of decarbonization pick up, whether it's the Philippines on their offshore wind interest or Malaysia with their energy transition, but now they're progressively pivoting even further to solar. What we talked about Singapore, you can talk about Thailand. They're all Vietnam has energy security issues, but a lot of that relates to an uncomfortable exposure to higher cost LNG. Do you really want to buy? How much do you want to buy? I've taken Vietnam a really long time, to close deals on LNG. But terminals and units have been committed for ages, but actually signing in contracts have been, and because they're always a bit more expensive than they want it to be, and but But this is the thing that drives renewables is it sets a fixed price, displaces those most expensive fuels. So at some point, all of these things become a harmonious theme. So like I said, when we run our models, silly though they may be, and all of that, they keep pointing that everybody's estimates of solar batteries and maybe onshore wind from a fundamentals point of view, looking out, have been low. And models will sometimes put batteries in later on fundamental basis, but actually what happens is the solar comes in faster because of a mix of fundamentals and preferences and policies, and then that creates and destabilizes systems, creates price dips in the day, and creates opportunities for batteries for ancillary services. So suddenly the thing that the model said was going to happen in 2035 is happening in 2025. Because it doesn't take that much to tip this forward. It doesn't take that much for, 1 gigawatt sooner or something. So everything that we're seeing is that we're still in an era where all green outlooks get revised upward every year. We haven't hit the ceiling yet. So that's very exciting because that's a lot of commercial opportunity. It's a lot of people have been investing time and money to get their positions. And I think 2024, 2025, we'll see a lot of projects coming in from the auctions of the past couple of years, and some things were delayed. We'll see an increase in policy support to drive things. We'll see a lot of companies with portfolios that they've carefully constructed go on the market and swap their stakes. So we've seen an increase in sell side activity. So we're really bullish on 2024. For that, from that point of view, in the role that we play. But from a pure renewables and a number of projects activity and stakeholders point of view, everybody's here now.
And I think one key thing, well, at least one of the many key things that you said was about the cost of the equipment, because the LCOE for a lot of the more kind of standard or proven technologies, namely solar, onshore wind, that's still coming down quite a lot. And with the gigawatt numbers rising and potentially exceeding forecasts, that bodes well for the price of the equipment, which is going to come down. So, and as the price comes down, then it's more attractive, et cetera, gives more room for battery, et cetera, right? Yeah. So
no, it's a really strong virtuous circle, and it starts happening faster and starts surprising people. And people say, "Oh my goodness, what does this mean? Maybe it's happening faster." And then it's like, "Whoa, we were going to build another gas plant." And I got nothing wrong with gas. We need to keep the lights on. There's lots of valuable things that electricity provides. We are not ready for 100% green energy today, but you build a new power station, you want 20, 25 years to recover your money. At some point, it's the back end that starts getting riskier. That fog doesn't lift all the way to the end, and suddenly you need your money back faster. And if you need your money back in 15 years versus 25 years, just to be sure, or people are only offering you 10-year financing or 15-year contracts, then you've got to decide what kind of world you are at the end. And people are thinking, well, it's going to be hydrogen, it's going to be hydrogen, it's going to be hydrogen. That's true, but will it be as much hydrogen as you think? Or will it be enough hydrogen or enough biofuel or enough something to be flexible? And will that bring even more? What we're seeing, I think, is more which countries will actually run out of solar resource. Those will be the ones, and that's still a little too early for excitement in 2024. But I think that anybody who's looking at the longer term, sort of net zero strategies, whether it's 2050, 2060, 2070, have to be asking, there isn't enough solar and onshore wind, even with batteries, to do all of this. So, there will be a back end. It just hasn't happened yet. So it's going to be a wild ride. That much is true.
One final question, and perhaps the toughest one. So you mentioned earlier that in 2024 and beyond, you're going to see an acceleration in terms of investments in the more mainstream renewables, solar, onshore wind. Offshore wind will probably still grow quite a bit. We're going to see policy, decarbonization-related policies and government support also increasing exponentially. But what about grids? Do you think that all of this is going to push governments such as, Malaysia, such as the Philippines and others to kind of upgrade and expand the grids, putting real money behind that? Or is that still just too complicated?
Oh, it's the answer to both of those questions is yes. Yes, it's too complicated. And yes, it's too complicated. And yes, there's going to be a lot of money spent. Will it be smartly spent? And here is where I do worry a little bit that the case for building out the grid, which is partly about making things smarter, but partly it is fear of whatever it means to not be ready and maybe have curtailment or maybe something that sounds to the layperson as maybe the lights won't go on or will go off. But so you can spend a lot of money building out the grid, as you know, and if you don't get more kilowatt hours, all that money is incremental to your current tariff, right? The tariff is cost per kilowatt hour. At the end of the day, cost per kilowatt hour, but at the end of the day, it's spread out over units of some sort. So if those units aren't growing, but you're adding grid, your costs are going up. So it's really about being smart about timing and smart about, not letting the utility just smarten things up or build things up just because they've seen somebody do this in another country. It needs to be a carefully aligned policy with what is actually going on in the renewables, what's actually going on with demand growth, what's actually otherwise it can be quite an expensive hobby to build out grid you actually aren't using, but that you built it so that you'll be able to use it in full 15 years from now. So this is one of my little pet projects, is kind of go around and just ask sort of little tougher questions about have we got the plan that really supports the plan? So of course it has to be done, but what order you do it really determines what people are paying. And I think that part of the equation gets undercooked sometimes, Joseph.
Fantastic, Mike. Any kind of final conclusions or takeaways from our conversation today?
Well, I think we both sort of allude to, both by the questions and sort of even the general tone or generic nature of some of my answers, and get specific. And I tend to get specific when there's like only something specific to talk about. But we're really talking about a step change and a wave, and there are little disruptions that slow things down. But by and large, most of the things that we see when you look across the region is the countries are starting to level up, so to speak, in terms of their attention to renewable energy. They're starting to create policy frameworks or supportive things that weren't there 2 years ago. We just talked about last year, and now action. So I feel like this is in a nice spot of the sort of S curve where we're starting to escalate some of this. These systems can accommodate a lot more renewable energy before they get bogged down in curtailment and a lot of the complexity. We're not even at 10 or 20% renewables in some of these markets. So there's a long runway is what I'm thinking, Joseph. I think this is a good time to be here.
Fantastic. And I do share your cautiously bullish stance and view. Mike, thank you so much. I know you must be exhausted with all the travels, and I'm glad I caught you tonight. And again, thank you very, very much for participating in the Asian Climate Finance podcast.
Thanks, Joseph. Always a pleasure. Best of luck to you and keep well.
Thank you for listening to this episode of the Asia Climate Finance podcast. Please note that the Asia Climate Finance podcast is presented for educational purposes only. All information in the podcast must not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. Also, please note that the views and opinions expressed by our guests are personal and may not represent the views and opinions of current or previous employers.